Mr. Aamar Singh of Angel One. Thank you for joining us here on News 9. Aamar, always a pleasure speaking with you. And a spectacular recovery for the markets yesterday. I remember the last time we spoke just earlier this week, Nifty was at this pivotal point where both bulls and the bears, they had equal opportunity to dictate the market sentiment. You, for one, were in the camp of the bulls. And after yesterday, I think it clearly seems that the ball is in their court, isn't it?
Yeah, actually, I would say the party is definitely on, no doubt about it. And what we see here is that the heavyweights also, because if you look at the major heavyweights, we have been earlier talking about HDFC Bank, so that also seems to have formed a bottom. ICICI Bank is trading at record highs, so that is a very positive sign. So it's very close to breaking. It's almost breached its highs, so that's a very positive sign. But the key question is that whether the markets are able to sustain at the current levels. That is the key question. Because if we look at Reliance, for example, again, a major heavyweight, it's very strong on the long-term charts. Short-term, we are seeing some sort of consolidation. ICICI Bank is strong on the charts. If I look at HDFC seems to bounce back, but again, it's not very strong because it's quite weak on the intermediate term and short-term trend, on the long-term trend. So that tells me that even if there is a bounce back, whether it's going to sustain or not. So that's a big question that we need to be really careful with going forward, given the current levels. Because there's a lot of euphoria and enthusiasm as well, and global markets have also been positive, so they've also done well. But the key question is that do we need to exercise caution, or do we need to really go all out? So I would say exercise some fair bit of caution here. And the good part is India VIX continues to be spoken about earlier also. So it's within very comfortable range. So I don't see much of an issue there. I've been on the bull camp only because despite the correction. And I stay there. So there's no sign of a trend change. So if I don't see a trend change, there's no reason for me to change my view. So any dip is a buying opportunity. If I look at the levels now, crucial zone of support for Nifty, if you ask me, somewhere around 22,050, that's a zone of support. Major support for Nifty is around 21,875, 900, which was the recent low on 22nd of February, not far, that is yesterday. So overall, markets are positive, and the best part is Bank Nifty is also fired. But if you look at Bank Nifty is trading at record highs, or Bank Nifty is not. So that tells me that not everything is very good in the banking space.
All right. Some caution is advised on Nifty, but the bias remains on the bullish side. But Aamar, I also wanted to, very interesting report I came across from Bernstein yesterday, and they spotted an interesting trend that, most major domestic institutions, they are not really, heavily investing in the PSU stocks this cycle particularly. Their ownership in PSU name currently stands at about 13.7% versus the 10-year average of about 14.6%. And instead, this rally has pretty much been driven by foreign brokerages and retail investors. What do you make of this report? Because to my mind, it doesn't seem that this rally, this tremendous rally that we have seen play out across the 12-15 months, has a strong footing.
So if you look at the PSU space, so we'll just take a few names like Bharat Electronics, BEL. That's very strong on the long-term charts. It hasn't corrected. It did correct, again bounced back significantly. It's a buy whenever there is a correction. Looking at the other space, BHEL, again very strong on the long-term charts. We are seeing, and it's far off from its all-time highs, because if we go back in time, BHEL at a point of time used to trade almost 390 levels. So currently it's around 232. So there is still a lot of scope, but yes, on the weekly charts, there is some sort of consolidation which we are witnessing. If I look at BP, Bharat Petroleum, so again, it is showing some signs of consolidation. If I look at Coal India is witnessing some profit booking. But overall, the long-term trend is strongly up. So effectively, what it means is that we have to understand one thing, is that just as trees don't grow to the skies, likewise, stocks don't go up forever. There is always valuation, and whether it is overvalued, undervalued, fairly valued, what are the valuations like? So smart money, those who are really thinking and investing, they would be very careful as to what they are buying, when they are buying, and at what price they are buying. Because Infosys, TCS, or for the matter, Reliance would be a very good company. But the question is at what price? Because
Right.
ultimately you have to generate returns. So that plays out very well. So you have to understand that all these companies which I talked about, they have bright future, but you have to decide when to buy. So that's something which investors will definitely have to look at. So these were some of the PSU. Long-term trend remains very strong and firm for most of them.
Morning, Aamar. Another sector that seems to be on a revival path last 1 year at least is the IT space. They were worst hit in the year 2022, losing almost 26% that year on the Nifty IT. They closed 2023 with 22% gains, and they're almost 5 to 7% up this year. Choppy last few days, and they are expecting rate cuts from the US Fed, which will basically improve demand and spending from the corporates who are their clients, especially banking, insurance and IT spaces, and the next gen sectors like AI and automation and cloud computing. Now, what do you make of the IT space? Is it time to get into this space because they're still far from their 52-week high? But is it wait and watch time?
I would say IT has bounced back significantly, and if we go back in time, so in the month of January last year, that is not last year, 22, it's almost 2 years back, Nifty IT had made a high of 39,446. Currently, it's around 38,000. Recent high was 38,559. If you ask me about the trend definitely remains strong and positive on the charts, but the short-term trend is more or less dicey, meaning it's more or less consolidation, it's more or less trendless, it's looking for fresh triggers in the market. So as you rightly said that, see, a lot depends upon the US markets, how the US markets behave, how the US Federal Reserve takes a look at cutting rates. So these are going to play very important triggers, and investors are also betting on them. So that's what is really sustaining and supporting these IT stocks. So I would say that you see, because most of them have a run up sharply, so you have to, I would definitely say that you need to exercise caution, because you also have to look at the risk reward ratio. You just don't want to get into a stock for the sake of getting into a stock. That should never be the case. Rather, one should wait, and on corrections, yeah, one should look at an opportunity. And any major signal from the US that there could be a rate cut likely in March, which right now is only 20% probability. So we'll have to watch out for that as well.
So would you suggest investors to get in at this time, or is it wait and watch time for the people who are holding these stocks?
I would say, if you ask me on the IT space, you should definitely, those who are long, they should definitely look at booking some profits. There's no doubt about it, be it any stock, be it Infosys or be it L&T Technologies, because L&T Technologies is also approaching a major resistance zone. It's not at all strong on the short-term charts. On the weekly chart, there is a loss of momentum. If I look at Mindtree, again, we are seeing a similar pattern. It hasn't really rallied that much. If I look at Emphasis, again, it is consolidating. If I look at Persistent, it's in a different trajectory altogether. But again, from a short-term perspective, there is profit booking. So it's clearly visible that in the IT space, there's a lot of profit booking. There's a lot of distribution that's happening at these levels, be it TCS or Tech Mahindra also. So I would say that you have to wait for some correction rather than getting at the current levels.
All right. And any other sector that's looking interesting to you at this point, sir?
I would say pharma is one sector. Again, it's been performing exceedingly well, and the stocks have really rallied significantly across the pharma space. So this is one space one can definitely look at. Like, for example, if you ask me about specifically about company, Cipla has been very strong. It continues to be very strong on the long-term charts. So effectively, it means is that this is one stock on any dip, any correction can be a buying opportunity. DB's Lab, if you ask me, it's not going anywhere. It's completely trendless. It's a trading range, 3,400, 4,000. That's the range. Currently, it's around 3,600 levels. If you ask me, Dr. Reddy's, again, in a different trajectory altogether. If you ask me about Gland, again, more or less, you don't touch the stock. If you ask me about Glaxo, So you've got all these stocks which are there to a certain extent. Granules is again doing well technically on the charts. So these are some of the for example, I talked about Cipla, that's very strong. Dr. Reddy's, they're very strong on the charts. Long-term structure is very strong compared to, if you ask me about Laurus Labs, that isn't going anywhere. If you look about Lupin is strong on the charts, but it's approaching a crucial zone of resistance. So you've got to keep these in mind before entering into these stocks.
All right, those are the views coming from Mr. Aamar Singh. Pharma sector is one on his radar. Sir, thank you for joining us here on News 9. Always a pleasure speaking to you.
Thank you for having me on the show.